All right, let's talk about the Indian cement sector. I know. It might not sound like the most thrilling topic, but trust me, it's a huge indicator of how the whole economy is doing. And this last quarter, it was absolutely full of surprises. So let's get right into it. So here's our game plan. We're going to kick things off with some pretty shocking growth numbers. Then we'll figure out what's driving all that demand. After that, we'll tackle the profitability puzzle, look at a huge GST game changer, and see how these companies are building for the future. And we'll wrap it all up with the one big question on everyone's mind. First up, let's talk about growth. Now, usually the monsoon season is when construction just stops. Everything slows down. And that means cement sales take a nosedive. But Q2 of this fiscal year, yeah, it decided to completely flip the script. Okay, I'm going to throw a number at you. 31 million. Any ideas? Just think about that for a second. It's a massive figure, and it's pretty much the heart of our story today. That's right. We're talking about 31 million tons of cement. And that was sold by just one company, the industry giant UltraTech, in just 3 months. That's the kind of mind-boggling scale we're dealing with here. And here's the real kicker. They pulled this off right in the thick of the monsoon season. In fact, their own CFO said the rain gods have been in full fury. This just wasn't supposed to happen. It tells you there's some serious fundamental strength in the market right now. And look, this wasn't just an UltraTech story. Not at all. The growth was happening pretty much everywhere. You can see here Heidelberg Cement's volumes jumped over 9%. Shree Cement, Sagar Cements, they were all seeing growth around 7%. The big takeaway? Demand was strong, period, right across the board. Okay, so that leads to the obvious question. If sales were booming when they should have been snoozing, who in the world was buying all this cement? Let's play detective and figure out what was really driving this. Turns out the demand was coming from pretty much everywhere. The rural market, for one, has been on fire. UltraTech said they saw 13% growth there, mostly from people building their own homes. But at the same time, you've got these massive infrastructure projects going full steam ahead. New ports, new airports, you name it. And then there's this whole new wave of demand, stuff like Google's $15 billion data hub. And you gotta remember, it's not just the data center itself, it's all the houses and roads and shops that pop up around it. So sales are way up. That must mean profits are through the roof, right? Well, not so fast. It's actually a lot more complicated. This quarter was a real puzzle for these companies. Revenues were soaring, but so were some pretty stubborn costs. This is the question that came up again and again on those investor calls. The top-line revenue numbers look fantastic, so where'd all the profit go? Let's break it down. This chart from UltraTech gives us a really clear picture. They had a ton of their plants shut down for planned maintenance, which added about 100 rupees per ton to their costs right there. Then you throw in a little more for advertising, a little more for staff bonuses, and you can see how those costs really started to eat away at their margins. You know, what's really fascinating is seeing how different companies tackled this exact problem. It's kind of like a tale of two strategies. UltraTech went for pure volume, just trying to sell as much as possible. Shree Cement, on the other hand, played a different game. They focused on value over volume, pushing their more expensive premium products. And the result? Well, Shree Cement actually came out ahead on profit per ton. It just goes to show you there's more than one way to win in this market. Now, right in the middle of all of this, something huge happened on the policy front. The government slashed the GST tax on cement. And while that had a really obvious effect on prices, the real game changer for the companies themselves was something most of us didn't even see. So let's start with the basics, what you and I would see. The GST rate dropped from 28% all the way down to 18%. Every big company went on record saying they passed that savings straight to the customer. That makes cement cheaper, so people buy more. Simple enough. It also makes those fancier premium brands a little more affordable, so people might upgrade. But here's the secret weapon. This quote from UltraTech's CFO says it all. The government didn't just cut the GST, they also got rid of something called the Clean Energy Cess on coal. Now, coal is a major fuel source for these guys, and this cess was a direct cost to them. It wasn't a tax on the final product, it was a tax on their operations. And suddenly, poof, it was gone. That was a pure, direct boost to their bottom line that helped fight off all those other rising costs. So, with demand this strong and a little help from the tax man, you'd think these companies would be feeling pretty good. Well, they're not just feeling good. They are putting their money where their mouth is and betting big on the future. Let's look at the incredible wave of investment they're planning. Let me hit you with another number, 22.8 million tons. Get this, that's not total capacity. That's just the new capacity that UltraTech alone is planning to add in its next phase of expansion. That is a staggering amount of new cement they're getting ready to produce. And they are definitely not alone. It's an industry-wide rush. You've got Shree Cement firing up new plants in Rajasthan and Karnataka. Even smaller regional players like Sagar Cements are expanding like crazy. The message is crystal clear. Everyone is building for a much, much bigger tomorrow. Phew. Okay, so we've been through a whirlwind of a quarter. Surprising growth, cost headaches, big investments. What does it all really mean? Let's quickly boil it down to the most important takeaways from our deep dive. So here's what you really need to remember. 1. Demand is on fire, even in the slow season, thanks to people building homes and the government building everything else. 2. Profitability is a super tricky balancing act right now. 3. That GST cut had a hidden bonus prize for producers by killing the coal tax. And finally, number 4, the entire industry is in build mode, spending billions on new plants. And that brings us to the final billion-dollar question. With all this new capacity being built, these companies are making a massive bet that demand is just going to keep climbing. But what if it doesn't? Are they setting themselves up for a huge future boom? Or are they accidentally paving the road to a brutal all-out price war?